Who anticipates today being the last day that they will live? Life is a beautiful thing that can be enjoyed by people of all ages. However, we must also recognize that death has no age limit either. Death is so uncertain and no one wants to fathom the idea of dying. But in our lifespan, at some point there is an end, and who's to say when or what age that end will come? With rising funeral costs and other expenses, no one wants to be financially unprepared for these events. Purchasing life insurance when young can prove to be a very smart investment because some life insurance policies can be paid in full in 20 years. Mature policies can be borrowed again. And with all life's uncertainties, no one wants to leave their loved one with the burden of their final expenses. The first thought I would like to discuss is the advantage of purchasing a 20-pay life insurance policy while you're young. According to an article in Forbes Advisor, a 20-year life insurance policy guarantees that you lock in a rate for 20 years and you pay level premium. And if you pass away while your life insurance is in force, your beneficiary will receive a death benefit. With that being said, say you purchase the insurance policy at the age of 19. Generally, when you're young and healthy, you get that low rate, that base low rate for the next 20 years. No matter if you develop any type of ailment over that 20-year span, you'll lock in that rate, and that's what you'll pay for the duration of that 20 years. Once you have paid your policy for the duration of the 20-year term, the face value of that policy follows you for the remainder of your life. So back to the age of 19, you bought that policy when you were 19, it matures at 39. At 39 years of age, you have a life insurance policy whose face value will follow you until your death. Now that I have explained the positive aspects of purchasing a 20-pay policy young, let's talk about the positive aspects of being able to borrow against your policy in relativity to age. Do you consider the financial aspects of your life in relativity to final expenses, or do you consider the financial aspects of your life in day-to-day living? That's a question to be asked. Now, with the borrowing option placed on some policies, purchasing life insurance while young for a specified number of years gives the insured the option of borrowing against the face value of that policy once it gains or builds cash value. Okay, so let's go back to this 19-year-old person who's purchased this life insurance policy. They purchased it young. They got a low rate on it. When it starts to build cash value, say at the age of 25, 26, they have a breakdown in their vehicle or something that happens unexpectedly in their life and they need to borrow money. Well, they can borrow against their life insurance policy with no penalty. Financial hardships can be just as uncertain as death, but with the borrowing factor attached to some policy, that can alleviate some of that. According to another article in Forbes Advisor, unlike most types of loans, insurance policy loans do not have a specified repayment period. So now you know a little bit about the 20-pay policy and the borrowing option with respects to life insurance purchase. Now let's finish by talking about not leaving our loved one with the burden of our final expenses. The final reason I would give for purchasing life insurance is because no one wants to leave their loved one with the burden of their final expenses. According to an article in Health and Social Work magazine, journal rather, the national average for across the board for funeral costs for an open casket service and an earth burial that follows is between $5,000 and $6,000. I don't readily have $5,000 to $6,000 to bury one of my loved ones. So life insurance purchased young, I have children, so life insurance purchased young can alleviate some of that financial burden. With funeral expenses being on the rise and also other after-death expenses such as mortgage payment, car payments, utilities, no one wants to leave their family with extensive debt when burying them or after-death expenses. In conclusion, I've shared with you some positive aspects of purchasing life insurance in hopes of persuading you to purchase your policy at a young age. I have explained to you how 20-pay policies, the borrowing factor, and funeral expenses and after-death costs can be positively affected when purchasing life insurance young. With that being said, according to the article, life is a marathon race, but a whole life plan stay with you to the end of the race. The author states that life insurance world over is the cornerstone, is considered the cornerstone of any sound financial plan. This gives clarity to the suggestion of purchasing life insurance while young, having many benefits and proving to be a lucrative asset both short and long term. Thank you.